Good day, YouTube. This is J Money with Falling Forward Financial. Just a REIT stocks here. As you follow my channel, I like a lot of different REIT stocks. Anything that provides an income. Growth is good as well, but sometimes it's good to diversify and get some stocks that give you a good return, and so therefore REIT stocks are good as well. But this is two stocks that cut you a check each month. I have a couple REITs that pay monthly, and then there's some that are quarterly. Some of them are monthly, which is kind of nice. But this is two stocks. So when markets are volatile, you can say that again, like they have been here in the past few months, especially the past few weeks. Investors may find comfort in dividend stocks because they have not quit paying. A lot of the ones that I have keep paying, so it's always nice to see that hit in your account. The dividend-paying stocks are those of large established companies that produce stable returns and are less volatile. Quite often they are value stocks. So I just did a MJ video. One of them was IIPR, and I talked about IIPR last week, as well as another MJ REIT that's getting popular. So New Lake is another one. But most dividend-paying stocks distribute payouts on a quarterly basis, just as I said, but there are some that put money into proverbial I got tongue-tied there. Proverbial. Again, a pocket each month. Here are two of the best stocks for monthly dividends. And the closer people get to retirement, and people in retirement do like monthly payers. So, first one is Ellington Financial. I don't have any of this one. Ticker EFC. So it's a mortgage real estate investment trust that invests primarily in residential loans, along with commercial mortgages and commercial loans, and about 2/3 of its portfolio in residential mortgages. As a REIT, it acquires and originates mortgages and mortgage-backed securities and earns interest on the investments. In the third quarter of 2021, total equity of the portfolio rose 14% over the previous quarter and $1.1 billion, and core earnings rose 2% to $26.4 million. REITs are required by federal law to return 90% of the earnings to shareholders via dividends, so they are generally great investment vehicles for some investors. Ellington pays out its dividend monthly, most recently declaring a per share dividend of 15 cents on February 7th, and a yield of 10.3%. So that's an excellent yield. Assuming that it pays out over the same rate over the course of the year, that comes out to about $1.80 per share annually. Ellington switched to a monthly payment from a quarterly in 2019 and got hit hard in the 2020 during the pandemic-related recession and economic shutdowns, but it bounced back strong in 2021 as the stock price was up 26% last year. This year, the stock is up about 2.8% year to date. The company reports fourth quarter earnings on February 20th. The market right now is favorable for REITs, and as one of the few asset classes that benefit from inflation. Inflation pushes rents and property values higher, as well as interest rates, which makes the portfolios more valuable. That in turn helps support higher earnings and dividends. Next one is Main Street Capital, ticker MAIN. So is another stock that pays dividends monthly. It is a business development company which provides financing for small and middle market businesses in the form of loans to grow their businesses. These are often companies too small to issue bonds or get financing from banks. Main Street Capital makes money off of its interest repaid on the loans or through an equity stake. Is that part of their deal? Main Street Capital works in the lower end of the middle market, companies with an annual revenue between $10 million and $150 million. The company has a portfolio that includes investments in 177 companies, so it's well diversified, with roughly $5.1 billion in market or in capital under management. Because most of its loans are structured as floating rate loans, Main Street Capital should also benefit in the rising rate environment. Like Main Street Capital, that are considerable registered investment companies, or RICs, are required to distribute 90% of their taxable income to shareholders to avoid the corporate taxes. So like REITs, they typically distribute most of that through dividends. And another reason why I like these dividend REITs. So Main Street Capital is remarkably consistent, and it has not lowered its monthly dividend since it went public in 2007. Currently pays out a monthly dividend of 21 cents per share at a yield of about 6% in 2021. Paid out $2.58 per share in dividends, including an annual supplement dividend. Stock is currently trading for about $42.50 per share, down about 5.4% year to date. Economic growth should benefit Main Street Capital, reflected in the company's above average pipeline of deals, as CEO Dwayne explained on the third quarter earnings call. So for income investors concerned about market volatility and impact of rising interest rates on their portfolios, these two monthly dividend payers are worth a look. And you can get both of these on Robinhood or any exchange. Ticker Main and ticker EFC. But that is two stocks that could cut a check each month. If you have either one of these, or if you have any other REITs that cut you a check every month, that would be interesting to see. And that is it for this one. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is Jay Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.